لا ما صح. انت لازم انا وسطيكم يا اسف. اهلا.
أصلا معايا نسخة لو عايز. Good morning. How are you? Yes. And thank you for the interview. It was very good.
Was it?
Yeah, I think. منور مصر.
منوره بهلا.
والله منور مصر.
منوره بهلا. طمني عن صحتك.
احلى حاجه حضرت الشهر اللي فات في كل وطن عربي الفرح. عشان تبقى عارف يعني.
والله فرحت.
والله
والله
العظيم
فرحت.
حاجه
والله
حاجه
سيمبل إليجنت.
حاجه عظيمه.
الله يفرحونا كلنا.
احسن حاجه حضرت
الله
في الشهر اللي فات. صح نفسه؟ صح.
Hello, good morning, everyone. It's a pleasure to have all of you here, and it's a pleasure that we talk about a very, very important topic. Just look at the title, Expecting the Unexpected. Cannot be more difficult than this. Let me very quickly introduce our panelists. I'm going to start with Dr. Hassan Ali, who's actually right here with us. He's the Dean of the Business School of Nile University and the Chairman of the Board of the Economic Research Forum. We have the presenters of the document from the IMF, Mr. Alexander Tiemann, advisor in the IMF Middle East and Central Asia, and the mission chief in Sudan. And Caroline Renteria, Chief of the IMF Fiscal Affairs Department and Public Finance Management Division. These are the ones who are going to present the report for us. And then we have a very distinguished panelist. We have His Excellency, Dr. Mohamed Maait, Minister of Finance in Egypt. His Excellency, Dr. Mohamed Al-Ississ, Minister of Finance, Jordan. So we have the two top leaders of anything related to risk and finance in their countries. Lucky them to be here. We have Ms. Antoinette Sayeh, Deputy Manager Director of the IMF. It's a great honor to have you. And we have Mr. Abdulrahman Al-Hamidy, Director General of AMF. I welcome all of you, and without any delay, I would like to ask Dr. Hassan Ali to come and make his opening remarks.
Take the mic. Thank you very much, dear esteemed guests and distinguished attendees. It's my great pleasure to welcome you all on behalf of the ERF to this very important event on managing fiscal risk. It's organized by the MOF, the ERF, and the IMF. I was writing this yesterday, and it strikes me that they are all end with the F, and it's not really different. It's very much in line with what they have been doing, as my friend Dr. Abla mentioned. The two ministers' finance is the finance, so everything is going to be really related to what they are doing. And the other F, the forum, the economic is really what we are doing right now. We are putting this to all people who are expert and interested in this topic to give their opinion. And finally, the fund. The IMF is the one who is going basically to make this risk mitigation happen. So today's event is very important. The theme is highly relevant in current economic climate, where the global financial landscape remains uncertain. We cannot overemphasize the importance of managing and minimizing the fiscal risk. And as we will see today from the report, there are many sources of risk, and it's crucial to promote the fiscal stability and sustainable economic growth in this case. It's our hope that this panel will serve as an avenue for fruitful discussion and exchange of ideas on the best practice for minimizing the fiscal risk in the region. This event is an opportunity for us all to come together and explore new approaches and the strategies that will strengthen our fiscal system and lead to better economic outcome. I want to extend my sincere gratitude to everyone in the three organizations who have worked tirelessly, especially in the MOF, to put this event together. I have no doubt that today's discussion will be fruitful and enlightening. And once again, welcome to this panel, and let us all work together toward a sound fiscal future. Thank you.
Thank you very much, Dr. Hassan. The three organizations have F at the end. Well, F, as an academician, F is not a good letter, but in our cases here, hopefully F is going to be a good letter with good outcomes. Okay, let's proceed with the presentation. Alexander and Caroline, please go ahead. You have 15 minutes.
No, yeah, perfect. Thank you. So welcome, esteemed ministers, other senior officials, ladies and gentlemen. Let me start by thanking the chairman, Dr. Hassan Ali, for his warm welcoming remarks. I would also like to thank both the Economic Research Forum and the Egyptian Ministry of Finance of co-hosting this event with us. So we're here today to exchange views on fiscal risks and their management in the countries in the Middle East and North Africa. We have just also today launched an IMF paper on this topic, which specifically looks at the low and middle income countries in the region. That is, in the paper, we exclude the high income countries from the Gulf Cooperation Council because their economies are quite different. So you can access the paper through the QR code that we have here in the presentation. Before we start the discussion with our esteemed panel, my colleague Carolina Renteria and I will present a short overview of the paper. Excellent. So what are fiscal risks, right? Going too fast. There we go. Karim warned me about this. There we go. Yes, this is the right slide. Thank you. So what are fiscal risks? So fiscal risks are factors that may cause the fiscal outcomes to deviate from plans or forecasts. And these deviations, they can be quite significant, as shown here by comparing forecasts of government debt and actual outcomes for 3 big shock episodes in the MENA region. So fiscal risks, they can affect budget revenue and spending from very different angles. You can have macroeconomic shocks that may, for instance, increase debt and interest expenditure, or they can lower growth and hence tax receipts. You can also have contingent liabilities that are liabilities from, for example, guarantees or public-private partnerships that transfer to the government balance sheet. And lastly, you have a source of fiscal risks, of risks that are not very likely to occur, but that can have a very large impact on public finances. Such tail risk events include things like wars and conflicts, but also large natural disasters. So when thinking about fiscal risks, it's important to recognize that many of the sources of these risks are actually outside the budget. So in order to identify potential risks, one needs to take a good look at, first of all, the entire public sector, but then also the broader economy as a whole. Yes. So in the next couple of slides, I will highlight some of the major sources of fiscal risks in the MENA region in a bit more detail. First thing to notice is that economic growth in the region is quite volatile, and it's more volatile than in other regions of the world. So we see here that growth varies quite considerably. Negative growth surprises normally, of course, affect households and the business community. So this directly leads to lower tax receipts. Imports and therefore also custom duties and VAT on imports may also be lower. And this is often at the same time that because of lower growth, the government needs to spend more in terms of social protection outlays, for instance, to protect people that have just lost their jobs. A second macroeconomic factor that can trigger quite big fiscal risks is commodity prices. This is true everywhere in the world, but it's especially prominent in the Middle East and North Africa region, where energy subsidies in many countries are high. So often these subsidies are in the form of a fixed or at least below market price at the point of sale. And if these retail prices do not react when commodity prices go up, the budget is on the hook for the difference. A second source of fiscal risks in the MENA region lies in contingent liabilities. So these are obligations that are normally off balance sheet. Here we go again. There it is. Yes. So these are sources that are normally off balance sheet until they are triggered, and then they become explicit on balance sheet liabilities of the government. Contingent liabilities can take many forms. In the MENA region, we see large non-financial state-owned enterprises, and in some countries, state-owned banks, and they can be a constant source of claims on the budget. And here we can also see that there are the impact of different forms of contingent liabilities can be quite large, and they can add up. So third big source of fiscal risk in the region, the region faces some specific challenges that can result in large claims on the budget. So even if the likelihood of some of these events in any single year is pretty low, the sheer magnitude of the impact suggests that you really have to think about these risks. So one of the risks lies in the management of conflict and associated refugee flows. Refugee flows stand out in a number of countries around the MENA region. Looking at the current conflict in Sudan and the refugee flows it has already generated here to Egypt and to other neighboring countries of Sudan is just the latest example. Another tail risk are large natural disasters. Over the last 2 decades, most countries in the region have been affected by earthquakes, floods, or droughts, just to name a few. The floods in Pakistan last year are a recent example of the severe impact they can have. So the paper we released today on managing fiscal risks in the Middle East and North Africa discusses these risks, these sources of risks in much more detail. But after discussing the risks, let me now hand over to my colleague Carolina, who can talk about how governments can actually manage these risks.
Thank you, Alex. So in the IMF, we support countries to proactively respond to the significant challenges that fiscal risks pose. We have developed a comprehensive framework to manage fiscal risks, and we provide capacity development support to policymakers around the globe. The Fiscal Risk Management Framework has 4 stages underpinned by appropriate institutional arrangements. The first stage involves identification of the sources of the fiscal risk, quantification of their magnitude, and estimating the probability of occurrence. Having identified the exposure, governments need to develop instruments to mitigate them. They should be tailored to the country's individual circumstances and will depend on the nature of the risks, the cost trade-offs between mitigation and accommodation, and institutional capacities. The menu includes direct control to limit the fiscal exposure, and indirect regulatory measures to reduce risky activities, and transferring or sharing of risks. In third place, you have governments need to consider how to provision for those risks. Options include direct appropriations from the budget, creation of budget contingency, and setting aside financial assets through, for example, sovereign wealth funds. Some risks, however, may be too large, too costly, or uncentered to provision or to mitigate. Governments should keep this in mind when defining their medium-term expenditure frameworks and setting long-term targets for government debt and net worth. Finally, fiscal risks should be disclosed in fiscal risk statements as part of the budget documentation and the financial statements. To support governments manage fiscal risks, the IMF has developed a fiscal risk toolkit in the right side of the presentation. It includes 8 tools that address specific issues. One tool helps identify the largest and most important sources of risks, while the fiscal stress test evaluates the resilience of public finance to large, extreme, and correlated shocks. We developed 2 tools to better understand and manage the risk of state-owned enterprises, SOEs. One allows the identification, monitoring, and intervention of risk in financially vulnerable SOEs, while the other provides a forward-looking assessment of the resilience of an SOE financial position under alternative scenarios. There are tools to assess fiscal cost and risk associated with individual loans and guarantees that governments extend to public and private entities, and another for standardized guarantee schemes. We also have a tool to assess the fiscal risks and cost of PPP projects, and to understand the correlation of assets and liabilities in the public sector balance sheet. In the MENA countries, many are developing the institutional underpinning by establishing macro fiscal units in the ministries of finance with the explicit responsibility of fiscal risk management. Egypt is one of the countries that has improved its fiscal risk framework. A macro-fiscal policy unit is responsible of macro-fiscal analysis, managing fiscal risks, and preparing fiscal risk reports to accompany the budget submission. In recent years, it has produced sensitivity analysis models to assess the state budget execution and conform a sovereign guarantee committee responsible for considering requests for guarantees, including exposure to individual SOEs. In 2022, the new PFM law introduced a medium-term budget framework. Jordan has pursued fiscal policies to support fiscal sustainability and strengthen the management of fiscal risks. This has served well when external shocks have hit their economy. In the IMF, we have supported the design and establishment of macro-fiscal units in MENA countries and trained officials in the use of the tools I just mentioned. We have also supported countries that are developing medium-term expenditure frameworks to increase its credibility and get a better understanding of fiscal trends, of projection of fiscal space, and identification of buffers. Oops. How do I come back? There I go. Okay, so we have also trained officials of 13 countries in the MENA region in the application of the tools. As can be seen in the map, the demand has been large for hands-on training on the use of the tools to assess the risk of SOEs, of PPPs, and of guarantees. Countries are also requesting specific support in designing solutions to minimize their exposures, as well as to prepare fiscal risk statements. Regional trainings and facilitation of peer-to-peer activities is at the core of the support that METAC provides. But fiscal and budgetary disclosure is also critical for effective fiscal management and accountability. In this, the region, unfortunately, has very low indices of fiscal transparency with an average transparency score of 22 out of 100 in the International Budget Partnerships 2021 Open Budget Survey. Jordan distinguishes as a good regional example. It has increased its transparency score to 61, reaching a level of informed public debate on the budget. Jordan also undertook a fiscal transparency evaluation, which assessed the country against the good practice defined in the IMF Fiscal Transparency Code. The fiscal transparency evaluation identified strengths and weaknesses and provided targeted recommendations to improve fiscal transparency. The government is working in this recommendation. We will continue to support countries in MENA to develop their macro-fiscal units and frameworks to expand their capacity to manage their fiscal risk and increase their fiscal transparency. Thank you for your attention.
Thank you, Alexander, for complying with the time and making a very quick presentation. Before we start with the questions, I don't know if you noticed or not, the region that's covered in the report is called MENAPEG, Middle East, North Africa, Pakistan, excluding the Gulf. This is exactly what the title means, which is, it was the first time for me to see, and I actually asked them, why do we have that? So I'm still waiting for an answer here. Hopefully at the end, consider it a question from the moderator. The report is talking about the situation. There are all types of risks that are available. Some of them are sudden and cannot be predicted. Many of them are known from before and are known ex ante and can actually be dealt with before. There are a lot of efforts in the region to try and improve things, but those efforts are still not enough, and we need to do a lot more. This is in a nutshell what the report is talking about. Having said that, let me turn to our very distinguished panelists and start asking questions. And let me start with His Excellency, Dr. Maait. Okay. Egypt is one of the countries, as mentioned in the report, that made attempts to improve its fiscal risk management system. So let me ask you, within no more than 5 minutes. What have you done in terms of improvement, and what are the challenges that are still remaining and need to be addressed?
Thank you very much, Dr. Abla. Let me start by saying that, yes, we have been managing different types of risk, particularly over the last 3.5 years since the beginning of the COVID-19 in 2020. And let me say, I'm going to start with negative impact of COVID-19 on both revenue and expenditure, and also on the budget deficit and the debt level. This is number one. Number two, this, which was the second shock, is commodity and energy prices, and the negative impact of that on the fiscal, which created additional burden on the budget, and also created high inflation. So this is the second issue. The third was also high cost of borrowing as a result of inflation and increase the cost of borrowing. This was also a risk to the budget, huge risk to the budget, that the cost of borrowing more than doubled now. I believe also, if we look at dealing with also the negative impact of climate challenges, which also have an impact on financing and also managing the negative impact of that. In addition to all of these, still we are required to ensure that real growth is going on, and also creating jobs are is going on. At the same time, we have to serve the debt and the debt service with ensuring the fiscal discipline and the targets. Let me give example. We, in the last 7 years, were able to reduce the budget deficit from 12.5 to 6.1 last year. We finished 6.1. How to ensure that this will continue? Number two, we are in the 6 consecutive years with a primary surplus. From a negative surplus of close to 5% to now we are targeting in the new budget, which will be discussed today in the parliament, 2.5. How can we ensure that this will happen? Also, although we were able to reduce the debt to GDP from 102% to 80.8 in June 2020, but with all the 3.5 years of shocks and the negative impact, now we last year finished about 87%, and the impact of exchange rate risk and the interest rate will have an impact on the debt. How we manage this? Let me say, with regard to the commodity and energy prices, we were able to, number one, indexation mechanism was introduced in order to observe part of the negative impact of energy prices. Hedging contracts, we adopted hedging contracts to protect the budget against the high inflation of commodity prices. Also, we're able to, with regard to debt and debt service, we created this committee of interministerial committee to control borrowing and control debt. In addition to that, we tried to diversify our financing needs, because now the cost of borrowing is very high. So we issued green bond, we issued Sukuk, we issued Samurai, we are about to issue Banda. So we are trying to diversifying the financing. And also we are trying with the issue of social package in order to compensate our people against inflation. We adopted 4 social packages for 270 billion Egyptian pound over the period April to April, 1 year. So all of these were able to manage all the risks. At the same time, we are continuing to ensure fiscal discipline. In addition to that, let me say that with accountability accountability and transparency, we created units and we publish the budget information, and we create unit within the Ministry of Finance to ensure that. In addition to that, we created in our organizational structure a unit or a department for managing strategy, managing fiscal risks, and how to ensure that all of these will be working in a way to protect our budget and to ensure fiscal discipline. Thank you.
Thank you very much, Dr. Maait, for stating the efforts and the challenges. And I'm sure there's a lot more to do, and that's being done. So hopefully we'll see more of that. Dr. Al-Ississ, Your Excellency, concerning Jordan, it was also mentioned in the report that you have done efforts in improving the fiscal management situation. So would you tell us a little bit about what was done and about the remaining challenges? Also, in 5 minutes.
Thank you. And it's a true delight being here in Egypt, where I spent wonderful years with my family while I taught at AUC. And when I reflect at academia versus policy, there are a few key findouts. Number one, in addressing the issue of economic challenges, is that really good policies yield good outcomes. So the principles are there and they check. But number two, which we often take as a given in academia, and it's not necessarily that in policy, is the political economy of reform is really, really the key determinant. We take for given that good policies are often implementable, and many times politically and socially they might not be, and that makes them a wish list, not a policy. So, you know, spending a lot of time with IFIs figuring out what should be implemented, what is the right sequencing, what does that country need, not just checking one-size-fits-all policies, is the key differential here. How we did it in Jordan was based on a couple of strategies. Number one, we decided that our strategies, our fiscal work will be socio-stable. That is, we will do policies that are supported by the average citizen. So on the revenue side, we went heavily after tax evasion and avoidance. For 3 years on record, we actually overachieved our target revenues without raising taxes, customs fees, anything, a penny, just by fighting evasion in an institutionalized, legislated, and AI way. We've even introduced AI into our tax system to do more focused auditing. The second thing is, on the expenditure side, we expanded our safety nets. So instead of going after the easy cuts, we decided we want the average citizen to feel this will actually help them. So we increased safety nets in a very targeted way that gets the support needed to those who most need it, while at the same time cut. I can't. I have Dr. Adel here walk in, who's a formidable colleague of mine. صباح الخير دكتور. سامحوني. And on the expenditure side, we've cut non-priority spending on OPEX while expanding CAPEX. So we ensured that the infrastructure is being improved, the services are being delivered, yet at the same time, we are cutting the fat, not the muscle. Of course, the key takeaways of that is that IFIs should really spend time understanding the political, economic context of the country, rather than come with pre-prepared lists in DC and try to check boxes. That makes the biggest difference. And they should speak to the average citizen, not to the echo chambers we often hear from. That also makes a big difference. And the third thing is that policies can be good for the citizen and can also be good, period. That is, you can do the right policies that help the average citizen. In 3 years, we've lowered our debt, lowered our primary deficit, increased our revenues beyond our target, while at the same time expanding our healthy expenditure, and maintained our sovereign rating during COVID, Russia-Ukraine, global stagflation, and our latest Eurobond issuance was actually issued at a rate less than a year before, although the Fed has increased the rate 10 times, because markets are very very prudent about what a country is doing to managing its resilience. Having said that, I cannot but agree with my good friend and colleague, Dr. Maait. The financing cost globally is really concerning, and I don't think IFIs are set up to deal with that. If you look at the concessional rates, they're no longer concessional. If you look at the availability of funding, it's no longer there. And I think we really need to understand that the current situation globally will not resolve itself on its own. IFIs, the IMF, the World Bank, all these institutions have to really understand the context that we're functioning in is very, very different than the normal good old days. Every penny we have been saving by fighting avoidance and evasion of taxation has been spent on higher interest rates. And I want to spend it on better education. I want to spend it on better health. I want to spend it on building the future of Jordan. But instead, the interest rates are eating it all. So yes, Jordan has good access at Eurobond markets. Yes, we maintained our sovereign rating, but that should not mean that we should be left to the whims of the global markets. The IFIs need to support middle-income countries in a way that, unfortunately, they have not been set up to do. Thank you.
Thank you very much. Thank you very much, Dr. Al-Ississ. And I think that your last words actually take us very smoothly into Antoinette's domain, all right? Because there was a complaint there, right? We are trying very hard to feed our people, to protect them from all those risks, and then those interest rates are eating up everything that we have. So as the IMF, right, how would you help countries deal with problems like this and deal with the risk situation and face it? How can the IMF help them? And how is the IMF actually trying to help them?
No, thank you. Thank you very much for the opportunity to join this illustrious panel and to talk about fiscal risk and how we can help countries, of course, anticipate and respond to those risks. I think the ministers, of course, have raised issues broader also than fiscal risk. But I think it's good to really try to get our hands around this issue in this discussion. So I'll really try to limit my remarks to that, while at the same time, of course, underscoring the fact, as the minister has just said, that we do live in a very different world. And that we need to adapt to that world. And that's precisely what the IMF has been working towards in the course of responding and helping its member countries respond to the pandemic, of course, the implications and the impact of the war in Ukraine, tightened financial conditions, making sure we have enough resources to serve the needs of all of our member countries that may need the IMF support. And our support, our financial support in response to these shocks has, in the case certainly of low-income countries, been tremendous, a lot more than we've ever done before. And we have more than ample resources to respond to our emerging market and middle-income country members as well, many of whom have drawn on those resources. We, of course, as everybody knows, made sure that the SDR issue back in 2021 helped countries also deal with very difficult financial circumstances. So turning back to fiscal risk, of course, in response to these unanticipated developments, many governments had to spend more and obviously sometimes borrow more than they had expected to in order to put a safety net under their economies and avoid further disruption to their development and growth prospects. We think that a better fiscal management obviously can help countries deal with these shocks. And we think that it's good for countries, of course, to try to do it by taking a two-step approach. First, to make sure to anticipate and plan and prepare for dealing with those risks. My colleagues earlier talked about the fact of trying to look beyond the budget to make sure one understands the sources of potential risks to their economies, which may be in state-owned enterprises or in the banking system more generally, the economy at large, and to really make sure those issues are understood. The likelihood and the magnitude of those risks also have to be understood to be able to plan properly for them. And then to adapt the potential response to those risks to their size and their likelihood. So smaller risks that are very likely to occur can be dealt with by small contingencies in budgets, whereas very large risks that are not as likely can be dealt with by potentially borrowing and planning to borrow to deal with those. So how to actually go about the second step, which is how to reduce and reduce the size and the likelihood of those potential risks. Governments should certainly try to mitigate their risk. I'll give two examples. One example, for example, if you have state-owned enterprise that an airline that belongs to the state, certainly governments can mitigate the potential risk from that by making sure that airline operates on a commercial basis, by ultimately privatizing that airline so that it doesn't come back to the budget. Another example might be a state-owned bank or just any bank in the banking sector, and to make sure that regulations are really enforced, to make sure banks themselves generate the buffers they need to withstand shocks and don't turn to the budget when those shocks come. So that's a second example. How does the IMF help? We certainly help with a lot of technical assistance as the presentation illustrated. And examples abound in that, in domestic revenue mobilization, public expenditure management, all of those areas, tax and customs policies that can help foreign debt management, that can help countries anticipate and plan for risk. And we have, of course, technical assistance experts, both in our regional technical assistance centers here in the MENA region in Kuwait and in Beirut, but also from Washington also coming, and also sometimes long-term experts in individual countries, helping countries deal with those issues. Of course, we have financial support that provide both the advice and the policy package that countries will put into place to deal with the sources of those risks. And so that's how the fund then tries to support our countries in this very difficult area. Thank you.
Thank you very much. Thank you very much for presenting those tools that the IMF is applying and taking the discussion back to risk as such. About risk, now, Dr. Abdulrahman Al-Hamidy, you are in charge of the AMF, you're the Director General of the AMF, and by virtue of that position, you have the umbrella for the entire Arab world, okay? So you heard everyone talking. Please tell us, how do you see the situation in the Arab world at large, and what kind of lessons do you see emerging from some countries that could benefit others?
Dr. Abla, thank you so much. And let me start by thanking the three organizations for organizing such an important session on a timely basis. And I would like to thank also the Dr. Maait for the invitation, and I'm happy to see the two ministers, my friends, even though virtually, but I am so happy to see them, and apologize for not being there because of my commitments here in Abu Dhabi. Let me start with actually the two external shocks that Dr. Maait started talking about them, and the impact that has made on the fiscal in our region. The two external shocks are the pandemic and the developments in Europe. If we take those two shocks and introduce them to the analysis of the paper, we would find out that most of the debt accumulated in the last 4 years are mainly due to the two external shocks. What did they lead? The two external shocks, they led to so much of impact on, first, on the growth of the economy, on SMEs, on employment, and that has put pressure on the public budget to extend support to internal different agencies and people within different countries in our region. The other one has put lots of pressure because of the inflation and then food prices and the import from outside, and then the increase also in the interest rate because of the inflation that did also put pressure on the cost of borrowing. Taking those two, which are external to our region and faced by everybody around the world, I think they have a lot to do with the increase in the debt, has a lot to do with the increase in the service of the debt. And I wish we have added to the analysis those two external, because they are challenges that, and I understand that we should be ready for the unexpected, and it seems that external crisis now would span over a very short period of time, and we should be ready for that. Let me also thank the IMF for being our main partner in the region for so many activities. And that's something we recognize, and our ministers and governors in the region do thank also for this partnership. We actually in the region, our assessment sometimes might be different from the IMF, given our closeness to the region and given also our understanding. However, we here at the AMF, we do have lots of activities for our ministers that they can share their experiences and they can benefit from each other. We have an annual meeting for the ministers that would focus, actually it has focused on those issues of fiscal risks, and an annual meeting of their deputies where they will go into depth for discussing those issues. Others that would focus on taxes. There is also another activity for the ministers on the Fiscal Forum, where the IMF Managing Director would be present in our region and the ministers to discuss different issues. There has been sharing of lots of experiences in the last few years on issues of food security, of sustainable finance, of circular economy, of state-owned enterprises, which has been mentioned several times. However, in our countries, we cannot just group them in one group and say this is the way they should improve. I think we should focus on different experiences in different countries in our region. There are challenges, however, and also there are good experiences that we can show in the reports. The AMF is very much engaged with different countries, whether it is in terms of our facilities and lending and our capacity building and training. But also let me, before I finish this first intervention, let me also raise the point that has been raised by Dr. Al-Ississ, which is the political economy of the reform. And I really agree with him on there are challenges here internally the finance ministers would have to pay attention to. And I hope the IMF would and try to understand that political economy of our region. We have refugees that are also external to certain countries, and they would require support. While there is an understanding of that political economy in Europe lately, we would like the IMF to understand the political economy of our region. So that even treatment is required from international institutions. And that we are working also closely with the IMF here, and they are our partner, and we as much as we can, we thank them for our understanding. We went over the last 10 years in our region into very difficult political economy and very difficult issues, and that understanding is very much appreciated. Thank you so much.
Thank you, Dr. Abdulrahman. Thank you, and the last point is definitely important. It means that we have local problems and local situations that have to be addressed by us primarily, but also with some understanding from the IMF. And it would be nice if there are publications from the AMF that put together the good experiences of the different countries shared. I mean, the outcome of those ministerial meetings and so on. It would be, I think, great to see. Let's move on to the second round of questions, and let us shuffle the panelists a little bit. So I'll start with Dr. Al-Ississ this time. In the first round, we asked general question about the situation and what you guys have done. In this round, we are going to talk about specific issues. So one of the things that was mentioned in the presentation is the social instability and the conflicts and the issue of refugees. Okay, and Jordan receives a lot of refugees. So the question is, what is the impact of having those refugees on the budgetary impact of the refugees, and how did you try to manage the situation?
Thank you, ma'am. Let me start at the bigger picture and then zoom into the refugees. Let me talk about the interplay between social instability and fiscal stability. There is a very clear correlation, but I believe it flows both ways. In the case of Jordan, global instability, the regional instability has been the biggest challenge for us fiscally. You can imagine that our population increased by 20% in a span of 2 years because of the inflow of Syrian refugees. And that obviously puts tremendous challenges on the infrastructures and on the budget. But also fiscal stability, I believe very strongly, is the biggest equalizer among a population. Because higher net worth individuals in any countries have access to hedging tools. But the middle class and the lower income class do not. And therefore, the biggest equalizer is to ensure that the fiscal and monetary stability is being sustained. And that's what we've been pursuing in Jordan over the past few years across the board. And we've been able to successfully do that. We just concluded a month ago our 6th review with the IMF on time. We have access to markets. We've maintained our sovereign ratings throughout. The challenge really is when your country and infrastructure is not set up to receive such an influx of refugees. What do you do with it? You have to accommodate them. You have to make sure that they are well educated, which is a global public service. You have to make sure that they're receiving the right healthcare, which is a global public service. You have to make sure that they are able to enter your labor market, even though you have extremely high unemployment yourself. The problem is, and going back to the discussion we've had earlier, ma'am, is that the IFIs, the IMF, the World Bank, and here I must really appreciate the role that the IMF has been playing with me. You've been my best advisors, you provided technical support, but you are also, you should be the world's biggest institutional memory. You should not be functioning like governments based on headlines. We have to function on headlines. The problem is we've been slammed with one major tail end big black swan event after another over the past 10 years. And therefore the headlines have been shifting. And the moment Syrian refugees were no longer part of the headlines, now Ukrainian refugees are the headlines. The IMF has no longer, the World Bank has no longer, the donor community has no longer prioritized that. But reality is, while they're not part of the headlines, they are still my daily reality. So for example, last year, out of the global support that was promised to Jordan for refugees, we've only received 37% of it. The rest I had to pay for from my own budget. But these refugees are not Jordan's problem. These refugees are a global problem. And while the events are accelerating fast elsewhere, we have to keep reminding ourselves that there are major spillover effects. Jordan's biggest fiscal instability risk is global exogenous shocks. If it weren't for that, we'd be in a very, very different place. But the fact that we've been able to absorb it successfully and do a global public good on the issue of refugees and others should not make the rest of the world, the IFIs, take it for granted. I am very proud that we've maintained stability. I'm very proud that we were on the right side of history as a country. Because a refugee that has access to healthcare, education, and labor markets is one less potential refugee that is going to extremism or what have you. But reality is, this is way beyond the scale of Jordan. This is a global scale and should be dealt with as such. The key takeaway is fiscal policy really has a very clear interplay between moderating the political scene and socializing the fact that the future has to rely on new technology and new understanding of challenges through facilitating the access to these. And that's what we've been doing in facilitating startups and growth funding and what have you, to encourage our youth to penetrate that future market. But we have to be very, very acceptant of the fact that the global scene today remains extremely vulnerable, extremely challenging. And frankly, we're not only dealing with risk where the outcome and the probability is known, we're dealing with uncertainty, where events are moving beyond the scope of our possibility to calculate what the risk looks like. And the best way we can prepare for that is to build fiscal buffers to ensure that if the shock comes, we can deal with it without having to rely on unsustainable, socio-challenging policies. So yes, in Jordan, we've been on the right side of history when it comes to the issue of refugees. We've managed our fiscal risk, we've maintained our standing, but reality is I am worried about the unknown unknowns that are lying in the couple of years ahead. Thank you.
Thank you very much. Thank you very much. I wish we had a longer time session to keep on following up on those questions. But before I move on to a different topic altogether for Dr. Maait, let me say that Egypt has also been on the right side as far as the refugees are concerned. We have 5 million refugees, and we don't call them refugees. They literally mingle in the society in spite of all the pressures that we're having, and that Dr. Maait is...
It's 5 million from Sudan, but in total it's close to 10 million now.
Okay, that's even
now
more.
we have close to 10 million. We received between 200,000, 250,000 in the last few days from Sudan.
And we don't have refugee camps. They mingle in the society. So I've been also on the right side, but I share with you, of course, the fear of the future and what's going to happen. Now we move to something else altogether, Your Excellency, Dr. Maait, on the risks. Okay, we talked about different types of risks. One of the risks that's faced in the region is the involvement of the state in the economies. Okay, through different activities, and this calls, of course, for a lot of support from ministries of finance and contingency plans. The question is about Egypt and about your experience in Egypt, and Egypt is facing that. How do you see this challenge in Egypt, and what are you trying to do about it?
For the role of the state in the economy, and of course, each country in the region has their own philosophy and their own reasons why specific involvement of the state in the economy. But let me say that with all the reasons existing, I think the whole are concentrating on how to ensure that if the state interfere in the economy, it doesn't harm the private sector participation in the economy. This is number one. Number two, how to ensure that the state entities will have not unfairly competing with the private sector, how to ensure that leveling the playing field with the private sector, because otherwise it will have a negative impact in the economy and in the budget as well. For example, if we look at the case of Egypt, we have our reasons why in the last 8 years the state interfered in the whole infrastructure and some economic activities. Although we understand very well that Private sector is most important partner for the economic growth and for creating jobs and ensuring that our growth will be sustainable. Is not with one particular period or one particular sector. So after that, we will lose sustainability of growth. I believe Egypt is recognizing that, and for the last few months and weeks, we've seen steps in this direction, changing the Egyptian competitive laws in order to ensure more independence, reporting to the Prime Minister, also to ensure that with merger and acquisition, more independence. The new committee for competitive neutrality headed by the Prime Minister, also to ensure that leveling the playing field for both. And also, I think now we are talking about how to remove all the preferential treatment for state-owned entities and remove all tax and custom exemptions or preferred treatment. Of course, this will help the budget because when you remove all of that and ensure some sort of fair competitiveness, this will ensure that both will pay taxes, both will pay customs, and also ensuring that the private sector role will increase over time, and this will help that the private sector will take the responsibility of financing the growth and ensuring that there will be sharing of risks instead of the budget taking all the risks by financing the growth. So the private sector will take it. And we put a target that in the coming year, 65% of our investment is taken by the private sector. I believe that the government currently is unleashing and supporting more and more roles of the private sector in our economy, and at the same time reducing the role of the state. The state ownership policy or strategy, which will ensure that roughly 79% of economic sector, the government will withdraw, and I think 55 plus or minus other sectors, state will reduce its footprint. All of these together definitely will be ensuring that some sort of fiscal consolidation, some sort of more revenue, some sort of less expenditure, because somebody else will finance the growth. For me, also, it will mean that less cost of financing, because I can make a difference between taking the responsibility to borrow to finance a project and compared to, no, I'm not going to borrow to finance a project, but I'm going to buy the service. Buying the service for me is less costly, definitely, even from the budget point of view, rather than to go and borrow money to finance projects, and after that you have to pay the cost of financing. At the same time, you have no assurance that this cost will be a success one. You may end up that you still pay the operational cost in additional to the expenditure. So anyway, I believe that the way we are now adopting for increasing the role of the private sector in the economy and making sure that this will be our strategy in the coming months and years will be very important for the budget and improving the to GDP and also the budget deficit. Thank you.
Thank you very much. I think removing the preferential treatment for the state-owned enterprises is great news for each and every person in this room, at least. Okay. And we also hope that the doctrine, the state ownership doctrine that came out at the end of the year takes the actual physical steps of implementation. So this is good news. Now back to you, Dr. Abdulrahman Al-Hamidy. Everything that we're talking about as far as risk is concerned, when looked at by the public, this is hieroglyphic, really. Okay, all this scientific talk is no good and not clear. How can the policymakers, in your opinion, explain this to the public, explain what the risk means and what it implies, and explain to them that what it implies is not and should not be a burden that's put on them, but actually an actual role that's divided between the people and between the government, everybody bearing the cost and the responsibility of the risk. Please.
Thank you, Dr. Abla, for that question. I believe it's very important. I believe the expectation of the public in our region and outside our region sometimes is different from the way it's perceived. The public always cares about the delivery of the public services up to their expectations. However, let us look at, and I will focus here on Egypt and Jordan. With their excellencies, the two ministers, and their communication with the general public. What I have noticed personally, and what we have noticed at the AMF lately, is there is a good deal of a transparency in the communication of the two ministers, since we are focusing on policies of the two ministers and on their communication with the public. Dr. Maait goes into details of the details, explaining to the public of how much the service of the debt is going to pay next year out of the budget and what is his revenue from taxes. And I believe going to that extent in explaining to the public is something that we should be appreciated and should be reflected in those reports. I believe those reports are very important to balance, because there is a high dependency of rating agencies on those reports. And yes, while we focus on the risks, but I think also we should also present those efforts that's done in our region. If we take both countries, Egypt and Jordan, they do comply with the statistical manuals that have been issued by the IMF when it comes to the publication of their statistics and their work on meeting the different requirements of publication of those statistics. Is there a room for improvement? Of course, there is a great room of improvement, and but also, are we progressing in our communication with the public? Yes. What we probably need to do in terms of communication with the public is, there is expectation by the public, and somehow there is doubts on the minds of the public that we need also to work on when we communicate from the public sector. And that probably we need to go into, listen, the important sectors that are important to the public, which is health and education. They do take a good part of the public budget in our region, and those services got to be explained. What we probably need to focus on the quality here. What also, when there are meetings for the finance ministers and the deputy ministers, we know there are good stories. We know there are good efforts from the public sector. It just needs to be explained. Again, if I may comment on the state-owned enterprises, I think we should differentiate between the ownership and the management of those. What the focus should be on the transparency, the equal opportunity within competition with the private sector, and the governance. If we ensure those three are there, I think this also would facilitate the privatization. We should not say that state-owned enterprises are less efficient than the private sector. What we should focus on, their governance, their transparency, and the equal opportunity within the private sector. And that would facilitate if we happen to go to the private sector. But there is a lot of transparency. There are strategies that are of 2030, 2035, 2040 in different countries in our region, including Egypt and Jordan. And I thank the two ministers for their effort, and I thank them for sharing those experiences within the meetings of the finance ministers and deputy ministers in our region. Thank you, Dr. Abla.
Thank you. Thank you very much, Dr. Abdulrahman. Thank you. Now, the last question is for you, Antoinette. We in the report, and it's actually again a specific one in the report, they talked about the risk and how those risks cannot all be known ex ante, and some of them simply emerge and countries have to deal with them, and this means that when countries formulate their medium-term fiscal and budget plans, they have to try and accommodate some of these expected risks so that they can manage them better. So what would be the specific advices that you would give to the developing countries and in our part of the region in that area?
Thank you. Thank you for that question. Before getting to it, let me just say that I very, very much welcome the minister's comments on the importance of the international community taking on board and understanding the costs that many emerging market developing economies, low-income countries bear from welcoming and making sure that refugees are part of their economies and have an opportunity to benefit. And increasingly, our work is paying attention to that in the context of the partnerships we're developing, for example, with UNHCR around our more fragile and conflict-affected states, but also around our work we do with other countries that are indeed welcoming large numbers of refugees. These countries, low-income and developing countries, are the biggest hosts of refugees. And we recognize that. And we recognize that it creates an additional cost for our member countries. And we're trying to understand how to factor that into the support we give them, especially when those costs bear on their balance of payments finance needs, which is what the IMF is there to finance. So we're very, very aware of this issue and very much working. Filippo Grandi was just at our board a couple of months ago talking about how we can do better on this together. So thank you for that comment. And on the issue of political economy, of course, also a big factor in reform efforts across the world, and certainly important to understand. So on the issue of risks that are not necessarily easy to anticipate, we think that the medium-term budget framework has a big role to play in helping countries deal with those risks. But currently, the budget planning process in most countries focuses on a one-year horizon, which of course needs to change because the decisions made in the budget context for 1 year often have implications over several years. And so having a more medium-term outlook when you prepare budgets will help governments better deal with those pressures that will come subsequently, will help governments understand the dynamics in their budget, helping them to make the right choices, especially, for example, in development planning. When you approve a budget in a particular fiscal year, this year clearly is going to have implications implemented over several years and need to be factored into a medium-term budget framework. It certainly helps governments to plan for unforeseen events if they can look down the road beyond a one-year horizon. So we very much help countries to put together medium-term budget frameworks. And what are they? They govern the preparation, the execution, the monitoring of these multi-annual plans for revenue and spending. And they help to promote fiscal discipline by really laying out more clearly for all to see the benefits and costs of current policy decisions. People see what they imply for the years ahead and can then better assess whether it's the best choice to make at a particular point in time. And of course, underscores better transparency and facilitates monitoring. So one example, I think, in the region that is worth noting, country example, is Morocco. which in the context of presenting its budget for this year, does have a 3-year framework, is also now considering introducing a fiscal rule based on a medium-term debt anchor to help it better anticipate as well. So Morocco is a good example that is worth looking into, I think. The fund, of course, is working with Morocco and other countries in the region around these issues. We're trying to get countries to also share experiences among themselves on their experience in modeling, anticipating developments coming forward, setting up their budget processes over a medium-term horizon. And we certainly provide quite a bit of policy advice on this issue, allowing for buffers in the form of contingency reserves, helping countries to understand how to put those in place, incorporating safety margins in their expenditure ceilings, and also helping policymakers identify items that they may be able to scale back should they be faced with a shock. So, but having said all of that, there's certainly no silver bullet, and every country is different. Every country has to adapt, those pieces to its own circumstances. But I think it's important to still say that there are broad principles that countries can abide by. One of them is certainly in preparing a budget to make sure that that annual budget is credible and is really built on prudent assumptions in preparing that budget. You build on adequate forecasting methodologies also, and that the fiscal objectives are really articulated in a very transparent way. Ideally, of course, budgets should be accompanied by an analysis of the main fiscal risks that go with it in the form of so-called fiscal risk statements that Egypt, for example, has been presenting along with its budget. Thank you.
Thank you very much. Thank you very much, and thank you all panelists. Now we have questions, and we are 5 minutes away from the end of the session, but I'm going to ask my distinguished panelists to stay for an extra 10 minutes so that we have more questions. We have more questions from the audience. Are there any questions from the floor, please? Okay, Dr. Heba Handousa, and then Dr. Hassan. Let us take to no more than a minute, please.
I was going to ask Mrs. Antoinette to tell us something about the prospects for the Middle East, the Arab countries, in terms of borrowing with the support of both the World Bank and the IMF on reasonable terms, given that our performance to date has been, I would say, very good on the development front. And I'm very worried about development expenditure, especially that I work in half of the governorates in the south of Egypt. And I note that the Ministry of Finance is having difficulty after we borrowed huge amounts to support infrastructure and education, etc. in the south. We're really meeting with problems as Egypt. And I wonder how we can square the situation, because we're having to stop finishing infrastructure, the enabling environment for the private sector to come in. We have no private sector in the south, and it was just starting to respond to the spending of the World Bank Upper Egypt loan for, to encourage investment. So what is your perspective on the next few months or year?
Thank you, Dr. Heba. Thank you, Dr. Heba. Dr. Hassan. Okay.
Thank you very much. And it's It's a very an interesting and great panel. I have a question that I have been struggling with for a long time that has to do with what both Their Excellency mentioned in terms of the risk coming from what we should call international externalities. The idea that we do have all of these events that happen around the world, and I have written about this in 2007, 2008, when the financial crisis happened, and the first bank that dropped was not in the US, was in the UK. This is a testament to the international externalities. Now, for the IMF as well, and there is nothing, and this is a food for thought, there is nothing in the literature that will deal with this. When we talk about externality, we're always referring to the national or the domestic, and we deal with it by internalizing the externality, making it appearing to the people who caused it. In terms of the climate change, for instance, in terms of the issue of the refugees and the migration and so on, all of this are not being dealt with in this case. I would introduce a new concept, how to domesticate the international externality. And this is a point that if we have a principle in economics that we could deal with, and this is again from the think tank, we need to work on that, making sure that there are policies, there are framework, there are architecture, there is an international agreement that people who caused the international externality should be paying at least part of the mitigation of this externality. Thank you.
Thank you, Dr. Hassan. Any other questions from the floor? Okay, please.
My question is about public debt and given the role it plays in actually, it has the potential of being both a huge fiscal risk or a source of fiscal flexibility. And my question is to the panel as well as the paper authors is it time to rethink our debt sustainability framework and change our thinking towards how we approach debt and how we approach it in a sustainable way to support growth and support the fiscal targets?
Thank you very much. Behind you.
Thank you very much. Would like to draw a parallel between the discussed paper and the topics and another working paper by ERF, which is titled Fiscal Policy Effectiveness Under Different Regimes. The analysis of this particular paper concludes that fiscal expansion leads to adverse effect on real GDP growth. So how effectively did we balance public spending, which is seen as stimulus, with real GDP growth? Thanks.
Thank you very much. Okay. Farala?
I would like to know about the Jordanian experience about how to deal with the climate change risk, because one of the main aspects raising now, we talk all of us about climate change risk. So how the Jordanian experience deal with this? Okay, thank you.
Thank you very much. Please.
I'd like to just ask two questions. One is related to the fact that where the report alludes to better social protection policies, I was wondering if you could comment on the impact that would have on women in the formal labor market, where you have gender progressive policies, and where the role of demographics and population policy would also come into play. Thank you.
Thank you. I actually have a question that I also received, and then Shireen, I will see if they have anything online. And it's related to the primary surplus that the IMF is always insisting on, and that the primary surplus is happening at the expense of cutting expenditure in areas that are extremely significant, and it's starting to become a problem in many countries. The question, what can be done about it? Shireen?
Yes.
So we'll have some questions online. We have hopefully 2 or 3, and then to give a chance for everybody to comment.
Well, we have a couple. One is a question from Dr. Musa. The World Economic Forum report of 2023 identifies the cost of living crisis and geo-economic confrontation are among the highest risks in the next 2 years. Both can be external shocks. How can the Ministry of Finance address the fiscal risks since they cannot be quantified? That's one question. The other is from Professor Heba Nassar. After thanking the panelists for a very interesting discussion, we talked much about the external variables causing fiscal problems. How can we have a social risk management internal policy to prepare ourselves for external shocks? And what are the implications of all that on internal economic, socio-economic policy priorities in expenditure?
Thank you very much. I think that's enough considering the time. The topics are diversified. Okay, I'm going to give each one of you a chance to comment on whatever he likes to comment on. Okay.
Start with me.
Yes, I'll start with you.
Okay.
After all, you have to go to the parliament after that. So actually being prepared with some of the answers would help.
The annual anniversary of the budget. I like what Dr. Hassan said very much. Who created the problem has to come up with a solution. I believe I've heard it from many big names in the West. They said, we created the inflation problem. Over the COVID-19, we borrowed a lot and we spend a lot. And after that, started the imbalance between the available liquidity in the market and the demand and supply. So the inflation started. And we created the problem further by tightening the situation, which as a result, people and countries like us have to pay twice. To pay for the inflation coming from abroad in a higher cost of energy and commodities and food and all of that, and higher cost for financing. Very expensive. Everything very expensive. So they have to think how to ensure that when they make the decision and they be part of the solution, not to leave us behind struggling with the solution. And our people pay the cost of the solution for not creating such problems. This is what I've heard it from many big names in this world. And I think this is very important to ensure that this will not happen again. You've said we're still under shocks and we may have further get additional shocks. I don't know what their policies will be if we face additional external shocks in the coming period, because the war is still going on and the uncertainty is high and the tightening policy is still there. Public debt and debt sustainability, striking a balance between managing all these shocks and reducing the negative impact of these shocks like inflation on the people, and also ensuring that the economy is still growing and creating jobs and improving the living standard of the people, particularly on the utilities and infrastructure. At the same time, ensuring fiscal discipline and debt to GDP is sustainable, and all of these together, it needs a miracle. It needs somebody who put it together. Because yes, we've talked. Dr. Abla mentioned very important thing. Insistence of the surplus, primary surplus, and its a negative impact on the expenditure. Okay, at the same time, a country like Egypt need to create 1 million new jobs every year. How can you create it? As a government, the maximum I can create 100,000. Who creates a 900,000? Private sector can create 900,000. Okay, we are ready. We are ready. But tell me how much investment and financing needed from the private sector. And also, I think somebody said very important point. Dr. Hassoun, she said very important point. Is the private sector, and are we ready to ensure that Upper Egypt will attract investment and will be ready to come and invest? We have to ask ourselves, because I am in favor 100% to let the private sector lead this economy. But the issue is that if you don't come and lead, there will be a problem in this country, because you will have more and more unemployment. You will have a situation that growth is not at that level. So yes, it's much better for any Minister of Finance to find the private sector is leading, to find the private sector is financing, to find that he is not need to borrow money and pay cost of borrowing, and peace of mind for him not to be under pressure to financing for the budget and for them.
Dr.
So
Maait, I'm asking you officially to continue the discussion on this specific topic with ECS in a formal meeting. And I think this is seconded by everyone sitting in this room.
to discuss it.
Saying the private sector can lead the economy and give them the conditions, they will lead and they will do well. That's
that, and I'm 100% in support of that. And I think for Egypt, you have now all the needed infrastructure to let the private sector lead the economy. And I'll be very happy not to be responsible to find more and more finance. Social dimension is very important for the stability and for ensuring that we strike a balance between ensuring that physical discipline, creating jobs, and creating jobs is one of the dimensions for social stability. Otherwise, with a country like Egypt growing by more than 2 million new citizens to our population will be a challenge. Thank you, Doctor.
Thank you, Doctor. Dr. Al-Ississ, please.
Is this working? Okay. Thank you for the questions. I'm going to touch upon some of them. Akhuya Al-Kibir Maali touched upon others. Let's start with your point, Sarah, about domesticating exogenous shocks. I think you've put your finger on something really crucial for the region. The region often in the literature, in the discourse of politics, of policies, has been presented as the source of exogenous shocks, when we often are, but we are also often are the recipient of exogenous shocks happening elsewhere. A lot of the socio-political instability that took place over the past decade was not decoupled from the financial crisis, the black swans we've witnessed in the past few years from COVID, Russia, Ukraine, stagflation, from the big economies talking about a gradual landing of the expansionary quantitative easing, only to actually delay it till the last minute, so that now we have to face one Fed hike after another in a way that crashed global economy into a very challenging setup. So I actually appreciate what you said. Reality is, I don't see that changing. I don't see the global economic conditions changing in a way that addresses that issue. So it is on us, I think, to start building buffers. I'll give you an example. At the height of COVID in April 2020, His Majesty asked the government to start building wheat buffers because he expected a supply shock post-COVID. So we've expanded our wheat coverage to 18 months in storage. That allowed us to not need to buy when the price tripled. And that allowed us to manage the fiscal potential shock of that. But the reality is, when you're always firefighting against daily challenges, it takes it takes a different kind of setup to focus on the upcoming risk when you're knee deep in ongoing risks. And I think the IFIs can work with us a lot actually to start identifying such risks so that we are prepared for that. On the issue of climate change, ma'am, thank you so much for asking that. Jordan was the second poorest country in water resources before the Syrian refugees. You can only imagine what a 20% increase in population in 2 years did to that. It is a real challenge, and it's a perfect example of how crises that originated elsewhere are affecting our countries, and we're asked to pay for it and address it in a way that big countries are not implementing themselves. So all of a sudden, the burden of climate change is now being distributed equally when it did not result from an equal source. It is a real challenge. We're dealing with it. We need to look also, and we've been looking at the potential advantages. So in the region, we could be leaders in renewable energy generation. And we've been trying to implement that. We're building a desalination and water conveyance project that is very expensive. And we're doing it, as Dr. Maait said, in a PPP way that makes us, rather than pay for the implementation of the project, rather pay for purchasing the service of the project, as he eloquently said. But the reality is it will be a burden. And it's a burden that we are facing together with our day in, day out developmental challenges. There was a question about women, which I really want to address, if I may, because one of my biggest regrets as a policymaker in the region is we have not done enough to unleash the potential for women participation in the economy. I can say it equivocally, we have really failed collectively to do the best of what that can do. We've delivered a lot on educating our girls, but we have not delivered on making sure our women are actually contributing sufficiently to the economy. The obvious answers are obvious. The de jure answers of sexual harassment and childcare and what have you, these are boring to me. These are necessary but not sufficient. The ones that are more interesting is what else do you need to do? So for example, in Jordan, we've done an assessment where we found that a single man tends to have a radius of work that's 3 times more than a married woman, i.e. public transportation that is safe, with expected schedule that is cost effective to meet the wage reservation for a woman is a must. But I think there needs to be more done, leveraging the digital advances post-COVID. My friend here has gestured elegantly that time is passing, and therefore I will stop. Thank you for a very engaging Q&A session.
How could you guess? Dr. Abdulrahman, and I'm going to give Ms. Antoinette the last word. So go ahead, please.
Thank you so much. I will not take a lot of your time, and I would like to comment on 4 of the issues that has been raised in a very summarized way. The first issue, I believe, was raised by Dr. Hassan on external shocks. And let me start by my belief is the international institutions do have that assumption crisis would come from developing and emerging economies, but never come from developed economies. And therefore, they have to develop a framework where the crises now are mostly from the developed economies, 2008, and the current challenges with the banking sector and some of the developed countries. And one of the reasons, because in those developed countries, they do not implement the international standards, and I refer here to Basel banking standards. And this is where probably some of the crises are going to come from the banking sector in the developed countries. Up to this moment, a good number of their banking sector is not implementing the international standards, and we need in the international institution to develop a framework where we ensure that they start the developments, and therefore crises are not necessarily coming from emerging or developing economies. The second issue on climate change, while we all believe that there are risks from climate change, but the solutions also should pay attention to the needs of poor and emerging economies and developing countries. we should not create new problems with the solutions, i.e. energy security is very critical. And if we go with some of the suggested solutions, Africa will be excluded. And that's what we don't want. The third issue on women and their participation in the labor market, I believe this is extremely important. And the Arab Monetary Fund has an initiative on financial inclusion, working along with the IMF, the World Bank, and with the with other institutions like GIZ. And I here would like to thank the two central banks of Egypt and Jordan. I believe they have done a great deal on financial inclusion and accessibility of finance, specifically to women. And I believe that would help also the participation of women in the labor market. Last but not least is the social risk management. I think that's very critical, and there we need to make sure that the subsidy being provided is provided in an efficient way, and to those who need it, not general subsidy. And here I think both Jordan and Egypt have taken tremendous initiatives in order to channel the subsidy to those only who need it, not to everybody in the country. Thank you.
Thank you very much. Thank you very much. Now for you, last word. IMF, yes, we can hear you.
The wrong one, I think. Okay, quite a few questions that especially interesting to speak to. But perhaps given the limit on time, I'll take up maybe 3 or 4 of them that I think is relevant to our work. First, on the issue of the prospects for the Middle East MENA countries in terms of borrowing on reasonable terms, as you put it, and you're concerned about the possibility of development spending not being met. Absolutely, it's a critical concern. Certainly, the tightened financial markets that are indeed a result of advanced countries dealing with responding to inflationary pressures and increasing interest rates and monetary policy response to be able to deal with some of that, have implications for emerging markets and developing countries in terms of their access to financial markets and the affordability of that. And that is certainly a focus of the messages we've been also sharing with all of our advanced economy member countries in terms of trying to keep in mind also the impact of rightly, I mean, policies that are essential to contain deflation and certainly important for the well-being of the rest of the world as well to get inflation under control, but to realize the impact that can have on financial markets and financial costs to developing countries. And this is where, of course, in trying to make sure countries continue to have an access to financing that is affordable, institutions like our own, the IMF, the World Bank, and others do come in to help countries adjust in a modulated way that does not crowd out essential spending. And that is certainly the focus of the support we've been trying to provide to our member countries in dealing with the multiple shocks that they've had, including tightened financial markets. So you're absolutely right that we do need to pay a focused attention to this issue. Countries on their part certainly need to do better, some countries, in looking at the composition of their expenditures to make sure what they are spending on is the highest priority expenditure. And that when they have these shocks, they give up those expenditures that can wait or that are not essential to their growth and development. And they can do better on their revenue side as well. I mean, they can stop giving blanket exemptions. They can actually collect what is due from existing taxes more effectively. That's all part of this their own response to shocks as well that they need to focus on. So it's multifaceted, I think, the response to that question. But that's how I would address it. I think on the issue of the domesticization of external shocks. Absolutely, this is a very important point. And you will see that in the context of the work that the fund has been doing in the last few years, in particular, in bringing attention to the macro critical implications of climate change for our member countries. We've underscored the need for the international community also to make sure that financial resources are available to countries that are really being hit by climate shocks that and that they have not been contributing to in a significant way at all, and that needs to be a priority, and that's an area of common good that our institution has been very much focused on. In responding to that, we've even introduced a longer-term financing instrument in the IMF, the Resilience and Sustainability Trust, that does provide longer-term financing to our member countries to be able to deal with climate adaptation. And so we're very focused on trying to catalyze more financing for that. On the issue of the primary surplus and the need to generate that in some country context and to make sure that that's done in a way that is that doesn't impede quality development and other spending. Absolutely, this is an area of our keen focus in all of the financial support we provide to our member countries. When countries come to the IMF, typically they've gotten to a point where they've spent way too much, way in excess of their revenues, and they absolutely have to try to get their arms around the challenge of dealing with that, while at the same time not penalizing development spending, or making sure that the impact of that fiscal consolidation is not felt by the most vulnerable segments of their societies. And to do that, of course, they need to look, I was just talking about looking both at the expenditure side and the revenue side and what more they can do to deal with that. The fund, of course, provides financing to help make that easier for countries to adjust to, because it takes time sometimes for them to mobilize more revenues. And we are there to help them adapt in the transition to fiscal consolidation that they need to put in place, because it is essential to a return to macro stability, which in turn is it's a critical underpinning for their growth prospects. So macro stability is essential. How to go about it can be managed in a way that is more inclusive and that is actually giving opportunities to do better by development spending. And if you look at the how fund programs have been implemented across many countries, low-income countries have about 90% of our programs with those countries do have a spending floor on social safety nets and education and social spending that are protected and increased. Jordan is an example. I think the minister will confirm that, where we've worked to make sure that the social safety net is expanded and really does try to respond to those needs. Last but not least, on the issue of women and the importance of gender and the very importance of really dealing with this, we, as you may know, do have a new gender mainstreaming strategy at the fund, given the importance, the macro criticality of gender issues in a number of our member countries, and the need to really pay attention to that. And we are in the first phase of that strategy, focusing very fully on issues around understanding better the macro implications of gender in individual country contexts, and how to make sure that that is actually mainstreamed in our policy advice in the context of our Article 4 discussions with country authorities, and where that is also possible when we have financial relationships with them, to bring some of the program attention to those issues as well. So Thank you.
Thank you very much. Thank you very much. Just one baby comment. Okay, the idea about the surplus is not only to protect the poor, all right, but actually to release the development potential of the country. It's not only the protection of poor. The surplus is causing a problem there. The three last sentences that I'm going to mention, giving myself the privilege of being the moderator. Number one, the risks that the country is facing, some of them are external, but some of them are self-inflicted actually and coming from inside and require a lot of local reform. And the ones that are coming from outside cannot be looked at outside of other problems. And this is why when we talked, immediately the other problems emerged, the debt, everything that has to be, all those accumulations. On the climate issue, definitely, the South is suffering big time, no contribution to the problem and heavy burden of the payment. And this calls for the South to have a louder voice in changing the international system, as a matter of fact, so that everybody can have the right. The IMF offered a huge program for Ukraine lately, okay, with all appreciation, all support for Ukraine and the Ukrainian people. There are other areas in the world that need similar support. And the fact that we need to create something special for Ukraine means that the system needs revision to be fair for everybody. And we are hoping that this would be the case. Thank you very much. We used up 2 hours, which is the official exact time needed. And Dr. Maait is warm enough to go to the parliament right away. I thank the panelists for their great contribution. I thank the IMF and the presenters for a great study. I thank ERF, Dr. Hassan. I thank you, Dr. Abdulrahman. I thank you all. And we meet again. And I hold you up to your promise that we talk about the private sector and what it can do at ECS. Thank you.
شكرا جزيلا، تحياتي للجميع. شكرا.